Hello, this is James Milan, and welcome back to Dollar Sense. As always, I am joined by Joe Camargo, our resident guru, and today we have a special edition of Dollar Sense because we've taken a field trip, and we've come to the Boston Federal Reserve Bank, and we are here with Dr. Jeffrey Tutel, who is a senior vice president here and the director of research, a doctor by virtue of his PhD in economics. So Dr. Tutel, thank you so much for joining us.
Thank you for having me.
And we're here to find out all about the Federal Reserve, or as much as we can today. So if you wouldn't mind just beginning by letting us know, what is the Federal Reserve exactly? Why was it created, et cetera?
So the Federal Reserve is the central bank of the United States. It was actually, we began the Federal Reserve. We needed it for years, actually. But there was banking crisis after banking crisis in the 19th century. And the only way to stop those banking crises before the Federal Reserve existed was J.P. Morgan or some huge banker would step in and stop the panic. So in 1907, there was a banking crisis that J.P. Morgan said, it's too big for me. I'm not big enough to do this anymore. And everybody realized we actually did need a central bank in the United States. So they started the Federal Reserve, and it was to prevent bank runs and try to make sure that the dollar was sort of sound and maintained to the gold standard. Mm-hmm. So that was why it was started.
We're just would love to hear a little bit more about what the differences are in structure, in pressures that are brought to bear, in variables that you have to deal with, et cetera, between, let's say, the Federal Reserve and the European Central Bank.
So we're lucky that the Federal Reserve is dealing with one country. So there's no issues of sovereignty. So California doesn't get all up in arms about monetary policy because it's different than what monetary policy should be in Texas or New York. We sort of assume that monetary policy in the U.S. should always be the same. Now that's very new for the Europeans. When they became unified in a currency, a single currency, they suddenly gave up this idea that they had control over their own monetary policy. And what that meant was that they gave up control over their currency values. And so this is a profound change from what they were doing for a very, very long time, since the gold standard, basically. So there's a huge difference there. Politically, are they there? Are they in the same place we are? No, because we have a unified federal authority too. So if Texas is doing really well and California is doing really poorly, then it's not just monetary policy that's trying to help out the country, because it's a national instrument. You can have fiscal policy, take some money from Texas and give it to Californians. There can be transfers there. And they do it, and we do that. And it's sort of like workmen's, unemployment insurance, things like that are ways to sort of transfer funds from places that are doing well to places that are not doing so well. Europe doesn't have that mechanism.
Yeah, a little bit more difficult to take some money from Germany and give it to Greece,
exactly.
For instance.
Yes, exactly. And so we saw the whole dynamic playing out, them trying to work their way through that. And so it was, it's much easier for us to just say, we'll do monetary policy, which is a national instrument, and you guys worry about the transfers between yourselves, you guys being Congress. But in Europe, they didn't have that choice. So it was more complicated.
I agree. I think it's fascinating to watch the two different systems work independently, yet at the same time cohesively. You have a lot of the major central banks right now looking to, and in fact over the last 5 years, looking to stimulate overall economic growth, global economic growth. So to watch the Fed and then to watch the European Central Bank enact their own policies with one goal, obviously, to stimulate additional macroeconomic growth is for me is very interesting to watch.
Thank you so much for taking this time to talk to us about what you do. It's important work, and we appreciate it very much.
Thank you for having me.
And thank you again, and thank Joe, of course, for joining us here at the Federal Reserve Bank in Boston For Arlington Public News, I'm James Milan. Thanks for joining us.